Hello, everyone, and welcome to today's webinar, West China Biotech Collaboration Dynamics. My name is Danny McCarthy, and I'm part of the IO360 team, and I'm really excited to kick things off and let the webinar begin so we can get the full use of the hour. So I'll just be going through very briefly some short slides, and then I'll bring on one of our co-moderators to begin the actual webinar. So this webinar will address cross-border collaboration and geopolitical forces that are reshaping biotech innovation between China and the West, innovation transfer from discovery to development and commercialization, deal structures, capital flows, and evolving models of licensing and investment. So in this webinar, we have representation from BioNTech, Jones Day, Bank of America, Harvard Biomed, InScienceWeTrust, and Scorpion Therapeutics. And as I mentioned, IO360 is one of the producers of this webinar. It's an annual conference that convenes key stakeholders spanning the science and business communities to report on the latest data impacting immuno-oncology to fight a wider range of cancer. Just making sure everyone can hear me. It seems like there might be someone who is not able to hear me. The 2026 meeting will be taking place the 10th to the 12th in Boston. You can visit io360summit.com for more information. And as an attendee of this webinar, you can use the code webinar20 for 20% off registration. Perfect. I'm hearing that. People can hear me. Great. Again, so IO360 is organized by Fierce Life Sciences. You can learn more by Googling Fierce Life Sciences. And we're partnering with BioVerse for this webinar. And we thank BioVerse for that collaboration. So again, I'm going to welcome Leon to join the stage and take over. And thank you so much. All right, Leon. Thank you so much.
Thank you very much. I just want to do a quick check. There's some audience members said that they only hear like loud music. If there's anything, please put your information in the chat box. In the meantime, in case you are the audience of BioVerse first time, my name is Leon Tang. I'm the co-founder of InScienceWeTrust Community. I'm also the founder of BioVerse webinar, which is monthly webinar focused on aging biotech from the aspect of business in the global drug development industry. Let me share some few quick slides so you have a little bit more idea who we are. Just let me know whether you can see the slides. Danny, please let me know.
Yes, we can see them.
All right, wonderful. So as Danny pointed out, it's our great honor to have a panel of very experienced deal makers and drug developers and investors on our panel today. And we'll get into it a little bit more, but before we do that, for the people who are dialing in the BioVerse first time, let me tell you a little bit about ourselves. BioVerse, where science sparks business and medicine, is really a monthly webinar co-produced by three US-based nonprofit. First and foremost is an InScienceWeTrust Community, or we'd like to call ourselves InSweet Community. It's a New Jersey-based nonprofit, really focused on advance the Asian biotechs in the global drug development space. We have over 4,000 active members. We do a BioVerse, which is what you are looking at today. We have a newsletter, which have over 5,200 subscribers. We have 11 WeChat, WhatsApp community, one LinkedIn page, a lot of members. The second one, probably arguably one of the oldest, if not the oldest or largest, Chinese American focused pharmaceutical association, SAPA, Sino-American Pharmaceutical Professional Association, a Guifili chapter. Again, they have been around for more than 30 years. The SAPA parent organization have a strong network of ethnic Chinese dominant professional in the world. The last, if not the least, is BioSpark, which is a Boston-based R&D and research-focused nonprofit with a lot of members in the Boston area, but right now spreading around the world as well. So that's really about BioVerse. Now you know who we are. Like I said, this is BioVerse also in collaboration of Immuno-Oncology 360 Summit, which has been going for more than 10 years. Full disclosure, the opinions speakers own does not represent our position. Please do not take our discussion as your investment suggestion. We are not broker dealers. And actually, before I get into the details of what I want to share with you, I would like to go back to invite the the speakers spend probably up to 1 minute each to give a little introduction of themselves. I'll go back to the first one. Probably I first invite my co-moderator, Axel Hoos, Dr. Axel Hoos. Say a few words about yourself.
Yes, Leon, thank you so much. And thanks to the organizers for enabling this webinar. So what I will say is my name is Axel Hoos. I'm a drug developer for the last quarter century or so. I've been in big and small companies. Just a few highlights. I was at Bristol Myers Squibb developing ipilimumab and starting the immuno-oncology wave that has actually gotten quite big at this point. I've been at GSK as head of oncology, rebuilding the oncology business of GSK after the Novartis transaction of 2015. And then my last gig was CEO of Scorpion Therapeutics, a classic Boston biotech that transacted and sold to Eli Lilly at the beginning of last year, so about 1 year ago, for 2.5 billion. And then beyond that, I've been on many boards, partnered with many biotech companies, started some companies, and have been mostly on the drug development and business development side. So things were quite interesting over the last quarter century. And the China dynamic we're observing now is adding on a whole nother dynamic in this, increasing our ecosystem substantially. If we look at it from a global perspective, and I look forward to this discussion. It's actually quite an exciting panel that we have put together here.
Yeah, fantastic. Thank you, Axel. So now let's invite the first panelist, Ms. Jing He. A few words about yourself, please.
Okay, thank you both. Hi, everyone. My name is Jing. I'm the Vice President and the Global Head of External Innovations at BioNTech. I lead the identification, evaluation, execution of strategic acquisition and collaboration for BioNTech. My team, we have played a pivotal role in multiple transformative deals you may have heard of that include BioNTech's strategic partnership with BMS in 2025, and the deal value is up to 11 billion. And the acquisition of Biotheus, that's a China-based biotech company that's in 2024, that's up to 950 million. I also have internal leadership roles in joint committees for several high-impact global partnerships that include the BMS partnership we have, that also include Duality, Medilink, and OncoC4. I have a global team across US, EU, and China. Before BioNTech, I was a biotech investor for nearly a decade. I have experience across public and private markets. One of the investments I made I covered is with Axel's last company.
Great. It's all like old friends come together. That's gonna make a conversation more interesting. So, Ms. Kang Lee, would you please a few words about yourself, please?
Hi, everyone. It's great to be here. My name is Ka-On Lee. I'm a partner at the law firm Jones Day. I co-lead our IP and technology transactions practice. Much of our practice involves China, US, China, ex-China deals. We've had the privilege of representing many US and China-based companies on their licensing deals. And I look forward to discussing with everyone on this panel.
Fantastic. So Aamir Mechlai, Dr. Aamir Mechlai, actually, please go ahead.
Yeah, no, thank you, Leon, and importantly, thank you for the opportunity to join. Really excited to be part of this panel. So my name is Aamir Mechlai. I'm a managing director based in New York in Bank of America. I'm focused on pharma and biotech coverage. I recognize, or I was told that we will also have a replay here for our Chinese viewers. So I'll also share my Chinese name, which I was given when I was last in Shanghai a couple months ago. So my Chinese name is Mai Kailan. So just by background, I've had 25 years in healthcare, spent 10 years at Pfizer in CMC and manufacturing. I then did a very odd pivot to move into investment banking. I've been now at BofA for 15 years. 5 years ago, I worked with my team in Asia to establish a practice that was focused exclusively on advising Chinese companies, Chinese clients on monetization of their assets to Western pharma. This was done 5 years ago. with a colleague of mine who's based in Hong Kong, boots on the ground. And this is all done before many people were even talking about the West China biotech dynamics. So those early investments actually paid off for us. And as a result, we've grown that practice to become the #1 bank by market share in terms of advising Chinese biotechs on M&A and licensing. As of today, we've actually advised on 8 deals over the last 2 years across both M&A and licensing. Just give you some examples of those deals. We advised Profound Bio on the sale to Genmab for $1.8 billion. We advised Rigor Therapeutics, Chinese biotech, on the sale of their breast cancer asset to Roche for $850 million upfront, $2.3 billion milestones. At the time, that was the largest sale of a Chinese biotech asset ever. We quickly followed that by advising Lenovo on the out-licensing of their PD-1 VEGF to Merck for $888 million upfront and $2.4 billion milestones. And for those that don't know, 888 is a Chinese lucky number. So if you're ever negotiating with Chinese companies, that you would certainly want to include 8 in there. And then most recently, we advised Innovent on their out-licensing of their PD-1 IL-2 to Takeda for $1.2 billion and 10 upfront and $10 billion milestones, as well as the recent deal that was just announced at JPM, Metalink's license of their B7-H3 ADC to Roche. So a number of transactions. And then finally, I'll just say at the end of last year, October, BofA had their inaugural Chinese biotech conference in Shanghai. We hosted 20 Western pharma, 25 Western institutional investors, and then 25 Chinese biotech, and coordinated over 200 one-on-one meetings with the Chinese biotech companies. So very positive feedback, and we hope to have that again this year as well. So thank you, and look forward to the discussion.
Fantastic. So I know Mike, Mr. Mike Patten, also a long-term China expert. So a few words about yourself. If you can list a few recent transactions you have led of a company, that would be great.
Thank you, Leon. So I had the pleasure of joining Harbour about 10 months ago as Chief Strategy Officer. Prior to that, a number of BD and investing roles at companies such as Celgene and BMS. And so, as you highlighted, Harbour had a very busy year last year. We are a Shanghai headquartered, Hong Kong Stock Exchange listed company, but we have a global footprint, and we regard ourselves as a world leader in the discovery and development of antibodies and biologics. And last year, we did a number of different deals, which was really exciting. We did a expanded collaboration with AstraZeneca in March, and then we licensed one of our programs to Otsuka. And sorry, I should also say we also did a newco deal with Windward almost a year ago to the day. And then we culminated in closing the year out with a collaboration with BMS. So a very exciting year, and it's a pleasure to join the panel today.
Fantastic. Now I guess the audience must understand why we invite each one of our panelists. They all have quite a few very impressive deal or track record they're going to share later on. Before diving into the specific deals, that's what I want to set the stage. In case you are living on Mars or don't follow the biotech very much, let me give you a little bit of recent statistics about this China-West biotech collaboration, especially deal-making space. Let's get into this. This is what a lot of people talk about. There's a different version of it. I like a PharmCube the most because they are the true China expert. I actually know the CEO fairly well. I had a long conversation with them, and JP Morgan understood his methodology, how to collect all those data. I would say this is one of the most comprehensive China outbound deal flow data set I have seen so far. As you can see, I mean, the data is quite fresh as well. They published this during JP Morgan, get a quick grab of it. So I pick some of the most relevant data to share with everyone. If you look at the chart on the left, which just show you the impressive, I would say only impressive trajectory of China to West outbound deal flow. In Silicon Valley, people always say my growth is hockey stick. We barely saw it, but China Biotech actually did it. This is a clear look like a hockey stick, right? So you can say the total value of last year already passed 130, actually 30, almost 136 billion US dollars with about 7 billion upfront payment. That's already pretty impressive. And if you put into context, right, really focus on like, outbound, out licensed BD deals globally, looking at a percentage of total value of those deals among all the major territory and countries. You would say China already account for about half of all the total deal flow. In this case, I want to specifically mention that this is a really licensed deal, excluding M&A or asset acquisition. So that's about like half of it. That's where it is. About China, that's kind of consistent on what the people saw. I'm pretty sure last year, when the CNBC reported about 42% license deal, I already have a suspicion that by the end of the year, it's going to be higher than 42. Turned out we were right. So it's about a 49%. This is really the top deals in the past, I would say, since 2024. A few of the deals actually mentioned by Aamir. So you say Aamir was real. He said they are the largest kind of in terms of total upfront payment and deal value. They're number one. Indeed, if you look at the top 10 deals by upfront payment, that's what we always focus on. Quite a few of them, I would say almost half of them came from his team. So congratulations. The 5 years, I would say, advantage turned out to become a dominant advantage, right? And if you go through this list, you will see a lot of familiar names. Some of them actually just announced recently, like the Aamir also alluded to the Remingin.
Leon, sorry to disrupt. You're sharing both your screen and your video. Can you stop sharing and then just reshare your screen so it's bigger for the attendees?
Oh, sorry. Oh, they have that function? That's strange.
So
How about now? Still the problem?
it seems loading. Perfect.
All right.
Yes.
Sorry about that. The
No
Zoom
problem.
always
Thank
have
you so
some
much.
surprise for us. Apologize. Okay, I know this is a small table. Hopefully people can see this now. Yeah. Like I said, if you look at this is top 20 deals since 2024. Just like Aamir said, his team contributed quite a few of them, especially top 10. It looks quite impressive, and I know the speaker is also involved in some of others. Let's give you a little bit hint. Why I want to show this table, because actually, if you look at the number, the top 20 deals actually contribute to the majority, literally majority of upfront payment in the past 2 years. So I want to mention this because I keep that in mind. This like, haves and have-nots difference is quite big, just like what we know in biotech space, right? This is just some really fresh data. We didn't have time to put in the table. Surprise to a lot of people. People think that 2026 going to be slow because that's what people said. Meh, that's with the JP Morgan 2026 in general. Not so much with the China Biotech. Those guys are busy, right? So they have announced 12 deals by the end of JP Morgan, which is a Thursday last week, including 10 China to West deals and 2 M&A, domestic M&A. So if you put all those numbers together, those deals already generated up to 2.6 billion upfront payment and up to 10 billion biobucks. That's a really good start. That's why I wrote a newsletter. So the China Biotech started 2026 with a row. So they say whether that's gonna be the continuation of this momentum into this year and beyond. Again, some of the deals we're going to talk about today, and we would love to learn from the audience and also our speakers. However, I really want to emphasize one thing. There's a lot of chatters. Okay, yeah, China is a kind of dominant. I'm not quite sure. Why do I say that? So, as a kind of a former investor and BD person, every one of us on the panel, we really focus on upfront payment. I mean, I'll get into why we're so obsessed with upfront payment. Yes, the bar 135.7 billion looks scary, right? A lot of people get nervous in the US, but you look at the tiny cyan bar, $7 billion. That's a cash from all those upfront payment from last year. However, if you look at M&A last year, which is one of the largest, if not the largest, it's 126 billion M&A. Most of the company are US biotech company. Most of the money went to US investors. And most of them, I would say vast majority of 126 were cash. Right. So I think that's, the investor, especially healthcare specialist investor in the US are doing great. I don't think they really get a lot of impact from the increased number. I want to emphasize the number of China outbound license deals. That's how I look at this. Here, I want to emphasize why we are so obsessed with the upfront payment. Because through the research, I'm a PhD by training. I always follow data. Less than 10% the biobucks were realized in almost like 20 years. And don't forget, the 10% realize that a buyback is not immediately, right? Through the course of years, as we know, we have to discount those cash. This is why we are so obsessed with upfront payment. I think that's really matter. So I'll really assure our US biotech executive and investors, we are doing great. We are doing fine. Don't worry about it. There's just a great opportunity. Why do I say that? Actually, this morning, just like karma, I would say, really show up why this China deal actually going to help us in the US, in the West. This is a great example. RAPT Therapeutics, there was acquired this morning by GSK for $2.2 billion. The equity actually worth about $1.9 billion because they have a still $300 million-ish cash. So if you look at the story, I mean, just to be honest, this company was in trouble by the last quarter of 2024. They're trading below $1 per share. And what they did, many other companies are doing or have done as well. They went to China. One of their investors went to China, identified asset. The user asset did a pipe, right? So they did a pipe, and in the meantime, they also did a license deal, which they paid I would say reasonable amount given their stage and also the company's background, right? $35 million upfront payment, less than $700 million biobucks. And then you say how they exit today, right? That's like 1.9 billion, like I said, for equity. Tremendous return. I did a quick back of envelope calculation. It was an 8.5 times return for the PIPE investors, which got in about 85 cents per share. But of course, there's like a 1-for-8 reverse split, stock split. That's why, probably do my math is around $7 per share that got in, and the exit and the 58 in 13 months, less than 13 months. Tremendous value creation for the investor and the companies and for the Americans, right? Because they're going to pay the tax. I'll stop right there. Hopefully that's give you a little bit background. Stop share the screen as well. Now let's get into the first part. First part of the story. I would really like to invite each one of our panelists to share one of the story or deals involved, and I would also after that I would invite every others, including Axels. We can chime in on information. So pretty much we're gonna do a full case study, if you may. I will start the first one. Probably with the Jing, because you mentioned you have the arguably the largest China-inspired deal. It's not a China deal, but it's a China derivative deal last year. You guys have this massive strategic partnership with the BMS. Please tell us what happened and what we can learn from it.
Okay, sounds good. Thank you, Leon. Great questions. Happy to walk through the two transformative deals that me and my team played a pivotal role in at BioNTech. I think BioNTech and my team were one of the earliest Western biopharmas to license assets from China. So before we dive into BMS, I know everyone wanted to hear about it. Let's start from Biotheus. So that's a China biotech company we acquired in 2024, 800 million upfront, up to close $1 billion of total value. We announced the deal in November 2024. We closed it in February 2025. And the key asset we got from Biotheus is called pumitamig, or BNT327. That is a PD-L1 VEGF bispecific antibody that we licensed ex-China rights initially from Biotheus, and we ended up acquiring the whole company in 2024. We believe in pumitamig offers potential to replace and expand the reach of first-generation IO of PD-1. We believe in the power of combination of IO and ADC to replace PD-1 plus chemo combo. We found the best IO and ADC assets from China, and we're executing the combination strategy right now. BioNTech now has 4 ADC plus pumitamig in clinic already. So you can see the pace of the deal making we did, and in the meantime, developing these strategies into clinic. So from a deal standpoint, I would say the acquisition of Biotheus is key for this strategy because through Biotheus, there were a couple of things that we achieved. First, we got the global rights of this molecule, which is essential for the next BMS deal. And second, we expand our clean dev capability, and now China became the second largest BioNTech global hub. Third, manufacturing site, and we expand the capability there. And fourth, we develop and grow the end-to-end bispecific antibody discovery and development capability. Biotheus team they have a phenomenal team doing that. So I have 2 team members in Shanghai. We hosted our R&D, China R&D Day in the summer of 2024, when we already have 3 China partners presented with clinical stage assets. So these are the partners some of our panelists mentioned already, MediLink, Duality. We also have Biotheus as a partner back then. I'm truly proud of the breadth of the assets we look into China. And interestingly, we announced Biotheus acquisition on the day before our R&D day, and then Merck announced their licensing of a preclinical bispecific antibody, same class, from Lenovo the same day. So we were really busy back then, and recall the deal market and the overall biotech market remained pretty quiet towards the end of 2024. So now from here, we have pumitamig global rights fully owned, which enables us to consider a partnership with a big pharma. If you think about the timeline, we closed Biotheus in February last year. We announced BMS partnership for the same asset in June at ASCO. That's just 4 months later. So I think this is rarely seen timeline among big pharma deals, especially with the value up to 11 billion. So to me, this is truly, light speed deal execution, thanks to my team, my colleagues, my CEO, who's my boss, and my senior leadership support. I think the learning I have here is speed is definitely the key. And that's not only for deal execution, but also for our clinical strategy execution. When we announced BMS, a lot of my investor friends from the past would put the 2 deals together, especially the price tag of these deals. But what I see from the other side of the table, not just the price tag of these deals, is that BMS partnership help us accelerate and maximize the value of the bispecific antibody. And before BMS, we were running 3 major indications. Now with our partner and recent collaboration, we're in more than 10 indications within just a few months. We'll have 8 phase 2/3 indications running by year end 2026. We share the cost and the risk. We envision this and execute fast. I'm sitting in internal BMS joint committee, so I'm glad to see such vision plays out, and it's been a truly rewarding experience. And lastly, I'd like to touch on the market dynamic. In the meantime, as a prior investor, I watch the market closely. It's interesting for me to see when we did these 2 deals, the deal market was actually quite quiet, and the XBI were still kind of at the low point. After we announced BMS, XBI recovered quickly along with the deal market. We've seen a lot more since then. Our China partner, Duality, had a very successful IPO in Hong Kong market last year. And interestingly, in the PD-1 VEGF class space, we have seen multiple data readout and catalysts play out through our BMS deal process. Other pharma peers you have seen in the market, like Pfizer and AbbVie most recently, also licensing the same asset class of bispecific antibody from China. If you imagine these bispecific PD-1 or PD-L1 VEGF to replace Pembro or Nivo or the PD-1 class, a lot of or majority or even all of these bispecific, they are from China. So it's really fascinating to envision what could happen in the next 5 to 10 years and how China innovation will impact the market and how the West-China biotech collaboration impact the entire healthcare market. So I believe our speedy execution on the 2 deals is going to be a very compelling story and a unique business case on West-China biotech collaborations, as well as biotech pharma collaborations for many, many years. I'll just pause here.
Okay, fantastic. Any other comments or questions to Jing from the panelist? She gave the under the hood look, even what's going on with the joint committee, right? Joined kind of a collaboration with the BMS. Any questions to Jing or comments before we move on to the next one?
Leon, if I may, I just add a comment to what Jing just said. It is truly remarkable if you are on the ground in China and you talk to companies, what actually the landscape truly looks like. You can't fully appreciate it from the distance. You actually have to be in China. And it's true from the perspective of being a host of Immuno-Oncology 360 or IO 360 as a co-host for this webinar. We have been wondering over the last several years, what is actually the next big thing in IO? What can add on or replace PD-1 monoclonal antibodies? And now the answer, at least part of the answer, comes from China with bispecifics, PD-1 VEGF-A. But again, if you look at the landscape and you're on the ground in China, this is not the full answer. There's a lot more stuff out there. We saw the Takeda deal, IL-2 PD-1. It's another IO molecule that can contribute substantially to the landscape and a shift in the landscape. There are other molecules we haven't made noise about yet, but they're there. And they're in the clinic already. So it's actually interesting to see how this will unfold. And I fully agree with Jing. China will contribute a lot to the evolution of the landscape. And we have about 8,000 biotech companies in China right now. So it's actually the tip of the iceberg of what we have truly seen at the level of webinars and other public discussions.
Great. Any other comments before I move on to Mike? All right. So question to you, Mike. So Harvard Biomed has a pretty impressive year last year, right? So have an incredible track record deal making. And when you're sitting on the sales side in this case, right, evaluating opportunities, how do you differentiate between offers from this large cap, big pharma, mid-size biotech, or investment fund for newco? What are the key decision points for you?
Yeah, it's a great question, Leon, and thank you for highlighting. Harbour had an exciting 2025, and we had the opportunity to do a number of different deals. So both on the newco side and also with large pharma as well. And I think the first thing to highlight is that really, obviously, no two deals are the same, and so it's hard to take a sort of one size fits all approach. And so for us, it's really about evaluating both short-term and long-term value drivers. And of course, recognizing that we have a duty to our shareholders, but also a duty to patients for these, for the therapeutics that we're taking forward. And so I think for us, it's really about evaluating the strengths of the different parties that we might be in discussions with, and the potential structure and deal that can maximize those strengths. And of course, if we're looking at newco, there's I think a couple of key elements to highlight. The first one is that in the newco, you're really talking about the formation of a new management team, and so this could be a really, really exciting group of individuals, potentially well tenured or entrepreneurs or have a particular vision for the program or asset that's under discussion. And then they can also be working with an exciting group of investors who share that vision and really want to get behind that program. And then of course, in terms of newco structures, I think most of the people on the panel, and of course listening to this webinar, are familiar with the fact that there's the opportunity for the licensor to get access to equity, and there's also the potential negotiation around geographic rights. And so there's a bit more flexibility potentially in the deal structure there. And then of course, if we go to the other side of the equation with large pharma, they bring a certain global size and infrastructure, which is obviously a different dynamic for the potential deal structure. And therefore, really, for us at Harbour, it's a case of evaluating those elements and then making a decision again in terms of those short and long-term vision for the program and what makes the most sense for both the program, for Harbour, and for patients.
Great points. Any comments or questions from other panelists? Actually, I have one for you, Mike. Because I know you led the very recent BMS and Harper Biomed R&D collaboration, which already have a huge upfront payment. So how do you see this new trend? Big pharma sign up like R&D collaboration deals, and sometimes they pay up to like triple-digit upfront payment. I mean, how does that, kind of change the global early stage drug discovery dynamics, in your opinion?
Yeah, I think this is really exciting, and I think really highlights the recognition of the West of the quality of science and the capabilities that exist in China. And so for Harbor, this is really exciting as a platform company to really be able to collaborate with companies to really accelerate the discovery of novel medicines, and particularly where we have such a powerful platform and we can't pursue all the ideas that we have, to be able to collaborate with others to do that is really exciting. But I think the key message is that I think this is a recognition of the quality, and the capabilities in China, and really that that companies like Harbor can operate on par or even above companies globally.
Fantastic. So if no further comments, I'm gonna move to Aamir. So Aamir, look at the top 20 deals, especially top 10. I see Bank of America in more than half of them. That's obviously involve a lot of big deals out of China. So drawing on your recent experience, such as like a Profound, GenMap, the really fresh one, Roche and Medlink and Roche and Rigor. That's all both like with Roche asset acquisition. What are the common threads in successful cross-border deals? Conversely, where do you see China biotech excelling right now, and where they have a obvious gap compared to their US peers, in your opinion?
Yeah. Oh, thank you. Oh, well, first of all, let me just take a step back. I think just the tailwinds from pharma to want to look externally for assets is the highest we've ever seen. Right? There's without a doubt, all the large pharma are looking for sustainable revenue growth. That's what drives their multiples. There's, the numbers we hear, $300 billion of revenue at risk at the end of the decade that they need to replace in their pipelines. The broader markets are trading at all near-term highs. CEOs are more emboldened to do deals. The shock effect of MFN pharma pricing and tariff impact is kind of worn off, and there's ample firepower. So there's all these external pressures for pharma to look externally for assets. So that's the driving point here. So why are these Western pharma looking to Chinese biotechs? What are they doing really well to attract the Western pharma? So there's a few areas. We've done some of the panelists have touched on them already. One, of course, I think we've all recognized just the ability for China to conduct drug development, 5 times faster, or whatever that number is, at 1/5 the cost relative to their Western counterparts. Importantly, the talent that's trained in China, they were many of the talent of these Chinese biotechs they were actually trained in the U.S. Have worked decades in Western pharma and have gone back to China to lead these organizations. Axel touched on this, the shift towards more innovative assets, including first-in-class assets and novel modalities. Next generation IO backbones. We talked about that. ADCs. There's next generation ADCs. There's novel modalities, dual payload ADCs, trispecifics. In vivo CAR T. So a lot of innovation we're seeing come out of China rather than just the Me Too's. Importantly, other factors that we're seeing in these successful deals is data integrity. Data integrity has been improving significantly. These Chinese biotechs are using reputable PIs. They're running trials in well-established tier 1 facilities. So the diligence packages that they're generating are kind of standing the test of pharma. Another area that Chinese biotechs are doing really well is that they're addressing the questions of whether Chinese data will translate to Western populations. And how are they doing that? They're conducting trials, starting to use Western data sets. Even though it's still primarily Chinese patients. They'll enroll Australian patients, or they'll enroll in some cases U.S. patients as well, to westernize some of their data set. And then finally, I'll say, what's been driving this is that the deal structures that many of these Chinese companies are looking for, they've been primarily, global rights, ex-China rights, and pharma love that. They love to get all the rights. They're willing to give up China. But so, if you compare that to a U.S. company with the same target, the U.S. company, especially if it's their lead asset, wouldn't just want to give up, all the rights so willingly. They'd probably want to have profit share. Many of these Chinese companies are willing to give up, all X rights. So all of those metrics have kind of driven to, successful deals. I think what are some of the challenges? It's not all roses in the West-East China deal making. I mentioned 8 deals that we've done from BofA. There's a number of deals that have not got done or almost not gotten done, and there's areas that could really, I think, slow down some of the deal progress. I talked about, deal data integrity while it's improving. We have found in some cases that deals have fallen over because the pharma will have different interpretations of scans, for example, than the Chinese biotech. So there's still work to be done in continuing to improve data integrity while that has been a focus. IP has been a challenge in some cases. Chinese biotechs are certainly getting better at developing IT strategies that can ensure the protection of pharma and their franchises. That's a key focus, but that's an area that continues to strengthen. And then manufacturing. Manufacturing is another key area that's a focus for pharma, where we've seen some complexities in deals or challenges in deals. The processes that Chinese biotechs are developing need to meet GMP requirements. They need to be able to demonstrate the ability to scale up, and importantly, provide pharma comfort that they can, transfer to pharma to manufacturing in-house. And then finally, what I'll say, the one other area that we're seeing that could be a complexity to all the deal dynamics is just the biotech IPO boom that we're seeing in the Hong Kong exchange. The Hong Kong exchange has, I think, last stat I saw, it was traded up 30% in 25. There's 300 IPOs in the pipeline, 2/3 of them are biotech. And these are giving Chinese biotechs now a credible exit beyond just doing a deal with Western pharma, where they didn't have that as an exit maybe a year or two ago. So they may not be as motivated to do these deals, given that they have options as well. So that's just another area we see that could slow down deal progress. But I think overall, what I'd say, and we saw this at the beginning of the year, Leon touched on this, and my takeaway here is that China is not just pharma's shiny new object. It's not just a fad. It's certainly here to stay, and we'll continue to see that momentum in 26 and beyond.
Great. Any comments from other panelists?
Yeah, Aamir, I love that summary. A good summary of trends. I will add one more thing that I've just, heard people talk about at the JP Morgan conference, which we all just came back from. There was this question raised, why do only a handful of biotech companies in China get all the deals? And, it's 8,000 companies out there. Why does this all concentrate on a handful? And there is no simple answer to this, but I think one key feature of this is just plainly the age of the ecosystem. This is a young ecosystem. It has grown very fast. A lot of the companies are new, and they have never done BD in that sense. They have never set up a data room, have never really negotiated complex terms. And it's a little hard to catch on. And, those that have experience, those that have done it before, they get another deal. It's easier to do. Those that are more like Harbor, established, it's easier for you to do a deal than for a company that's made molecules but hasn't even been in the clinic yet. So it's just a different setup, and that the majority of companies are young. They're not that established yet. Obviously, time is a factor here. This will shift. and there will be a broader spread over time of deals across more companies. But there will also be a few hiccups along the way, as Aamir said, right? Data quality is improving, but it's not perfectly established for all companies across the spectrum. There will be other things of that sort, and it falls to us as, potential collaborators in the West to actually help the Chinese companies to get to that point. The more interactions we have with them, the more we can share examples of what a good deal looks like, the more successful deals we ultimately will execute. And I'll come back to some of that in the next round of questioning, but I think this was an important addition to Aamir's very nice summary.
Yeah,
Fantastic.
thank you. For those companies that don't have the experience and are looking for advisors, feel free to call BofA as a financial advisor. Jones Day is a legal advisor.
They can also reach out to me. I give some consulting advice as well. Okay, so last question definitely go to Kayang. I mean, that's a natural transition. Aamir already threw the ball to you. I'll give a more specific instruction. So one of the biggest, if not the biggest, elephant in the room is geopolitical tension between the US and China, right? So can you comment on the real impact, right? Not like, kind of what the journalist said, the real impact on US-China relations on the deal execution. Specifically, could you share your experience working on the completed genomics and Swiss Rockets AG, right? That deal you led. I know you also led another deal we highlight today. It's up to you whether you want to share that as well. So your experiences upon these two deals. If you want to just focus on one, that's also fine. Please go ahead.
Sounds good. So I would say pre-Trump, the US-China relations were probably more like background noise to the licensing and collaboration deals that I was working on with respect to China-based licensors. But since Trump, I would say that the geopolitical relationships definitely have affected deal feasibility, timing, structure, and execution. I think the geopolitical concerns have definitely had a real impact on deals. In practical terms, I've seen the geopolitical tensions show up in three ways. First, heightened regulatory uncertainty. Parties are now assuming that the rules will likely tighten and not loosen over the life of the transaction, and that has affected how the deals have been structured and the relevant provisions that have been increasingly negotiated, the type of provisions that wouldn't have received as much attention pre-Trump. Second, would be expanded diligence and risk assessments. Issues like export control, sanctions, entity list restrictions, data localization issues, regulatory approvals. All of these things were maybe pre-Trump were diligenced kind of during the deal or only a light touch diligence. But now all of these issues are definitely resulting in a deeper diligence on these issues, increasing the scope of questions being asked by the licensees to the licensor, and also coming from the side of the licensee, who is also understandably increasingly being cautious about their deals and the time and money they're investing to make these deals, which of course could be for naught if the government blocks the deal. So I've seen these issues affect deal timing as well, especially when the parties aren't prepared, especially when the licensor isn't prepared for all of these questions that the licensee is posing to them. This does not mean that deals are dying or that they're impossible because of the geopolitical tensions, but it just means that the parties are increasingly addressing these uncertainties and risks straight on through diligence, thinking about the deal structure and execution. And they're thinking about these issues, and they should be thinking about these issues early to avoid any delays. On the complete genomics Swiss Rockets transaction, for those who don't know, this was essentially an industry-changing deal that Jones Day worked on that I had the pleasure of leading. It closed in October last year. The licensors there were two licensors. Jones Day represented MGI US, a wholly owned subsidiary of the Chinese entity MGI Tech. And the other licensor was Complete Genomics, which is also a US subsidiary and a 100% owned subsidiary of MGI Tech. They were both the licensors. And then on the other side was the Swiss-based biotech firm Swiss Rockets. Not big pharma. My understanding is that it's kind of a smaller mid incubator. And so, to answer one of the questions I saw in the chat, this is the deal, but it wasn't big pharma or big biotech involved. It was a smaller company based in Switzerland with a US presence as well. And so my firm Jones Day, we were engaged by MGI and Complete Genomics, and we represented them in the negotiations. I can't say too much about the deal. Obviously, a lot of it is confidential, but it was a license where MGI and CGI granted Swiss Rockets a license to manufacture and commercialize MGI and CGI's next generation gene sequencing technology called Cool MPS. And outside of Asia Pacific and the Greater China regions. The licensors got paid various upfront payments, including for certain tech transfer obligations, and they also got paid, they will be getting paid royalties based on net revenue. There, again, some further background is that, MGI US and Complete Genomics are subs of MGI Tech, a Chinese biotech company. The Biosecure Act, which was enacted in December last year, that act restricts US federal procurement and grants involving biotech products provided by biotech companies of concern. And the law treats any company on the Department of Defense's 1260 list of Chinese military companies as companies of concern. And MGI Tech, the Chinese company that owns the licensors on this deal, MGI Tech is on that list, on that 1260H list. This is all public. And so the deal has gotten a lot of attention for two reasons. First, the industry saw two US subs of a Chinese company on the 1260H list structure and execute a compliant deal that still has a lot of commercial upside for both parties. And I think it shows how a China-linked company can continue to participate in the global life science market despite, mounting geopolitical headwinds. And it's also gotten a lot of attention because it's seen as the first benchmark deal of Chinese scientific instrument IP going global. And so it not only opens up a new growth trajectory for MGI and CGI's future growth, but it also sets a really new example of Chinese biotech companies expanding overseas. So it's a really good example of how China-West deals can be structured to address and accommodate geopolitical risks. The model that MGI used, where they've got two wholly owned US subsidiaries, even if you go on, and they're independent companies that have their own products and have their own standalone value. So Cool MPS, which is the core asset being licensed to Swiss Rockets, is owned, controlled, and marketed by Complete Genomics. If you go onto Complete Genomics websites, it's its own company. Our client, CGI, was represented by, I think, their senior vice president, who was located in San Jose, just like me, located in Palo Alto. We, of course, had input from the China team at MGI Tech. And then, of course, you can imagine the time of the calls. We had Europe, China, and California to accommodate. But these entities, CGI, especially CGI, is a real company that's been around and operating for over a decade, and they first launched Cool MPS in 2022. So it's not just a surface layer, we're just going to establish a newco in the US and try to get away with it, right? This is a deal structure that's been thought about for many years now. They have these subsidiaries have their own assets, and there's a lot of credibility with these companies. And it just shows that these regulatory realities that we live in need to be addressed very early on. And I would say that these regulatory activities were revisited during the deal throughout the entire deal process. The deal structure and the provisions in the agreement were evolving over a number of months, and they were constantly pressure tested in light of the regulatory realities. And as I said before, even provisions such as the financial provisions, allocation of responsibilities, all of those provisions were looked at in the light of the regulatory realities that we were existing in, which were obviously evolving as well. And so while no one in the room had a crystal ball, the transaction was, I believe, structured in a way that would enable the agreement to be and relationship to be resilient, including if the political environment deteriorates further. And then, as I mentioned as well, Jones Day represented Jemincare on the licensing out of its asset to RAPT. And so, today's announcement was very exciting for us as well. And it also highlights the massive promise that these Chinese licensing deals can bring.
Fantastic. Because of the time we're running behind, I'm gonna quickly hand over to Axel, who's have a second part about newco focus. So Axel, please take from me.
All right, so Caron gave us a great segue into another topic, more or less the elephant in the room. We've spoken about, pharma deals, and of course, every Chinese biotech would like to do a deal with a prestigious, established, large pharma outside of China. Who wouldn't? But at the end of the day, the majority of deals that are done are actually not pharma deals. They're newco deals where, you basically create a newco spin-out with Chinese technology, usually out-licensing to ex-China rights, and develop the asset globally outside of China. And when you compare deal terms between a newco deal versus a pharma deal, they're distinctly different, especially when it comes to upfront payment and then downstream value. There's a lot of, the value that's being created is depending on the execution, the quality of the work that's being done globally to optimize what this asset can do for patients and then subsequently what its financial value might be. So with that said, the newco model has been talked about a lot in terms at JP Morgan and in other places. And the question that I would pose to the panelists, how do you see the newco model versus the pharma in-licensing model in terms of the future of how we will evolve the deal landscape between China and the West? I will just say one thing, given the volume of innovation in China, not all of it can be transacted by pharma and is being transacted by pharma. There needs to be other avenues. And the individual asset newco model is also not going to fully address that by itself. So, the reason I'm in this process is because we basically aim to do a sweet spot scenario in between those two deals, single asset newco, individual asset in licensing by pharma. So we're creating a holding company that is scaling the newco model, so multiple subsidiaries in a hub and spoke model with individual assets from China in one newco at a time, but governed and funded through a hub and spoke or holding company umbrella. So this is in between. It's a portfolio approach, but it uses the newco model. And we see that scalability is actually an essential new feature in the deal dynamics with China and gives more Chinese companies an opportunity to actually contribute their assets to a global development approach. So with that said, having all these three things now on the table, how do you guys feel about the future of the deal landscape, putting the newco into the picture? It's not all big pharma that's doing deals. So maybe we just start with Jing again and then just go around. And just to say this, we're running out of time. So please be a little bit more brief.
Yeah, sounds good. Thanks, Axel. I think what I can add on top of that from the execution side of things, as we integrated Biotheus into BioNTech, as we grow our own China team, I think back in 2023, 2024, it's a very different market dynamic where I would say for now, the newco model would have, the companies would have more options. Back then, the market is very different. So the biotech companies would be more reluctant to take the risk. And on the other hand, I think the newco model really helped to build that team and then develop the team into more of a global capability. I think, from my experience with Biotheus integration, we can sure leverage a lot of the local Biotheus capabilities, but when it comes to global clean dev capabilities, building a team with the right talents, who has the right global expertise and experience, that's also important. I think a lot of the newco model would be helpful for the company and for the management team to grow into that. I think that would be more attractive, and it would be healthy actually for the biotech company to take the risk, consider both strategic and fundraising, and to wait until the true inflection point of the asset.
All right, good points. Mike.
Yeah, I would agree with those. I think we're really going to see that evolution of the newco model to be less sort of focused on the transactional and much more strategic, and really forming some global teams where you have the respective strengths of the different teams. And I think something which we also haven't talked about yet is also the sort of the clinical pathway that's available in China, and groups looking at focusing on harnessing that and for accelerating programs as well. And so I think we're going to see increasing sophistication and evolution in the newco model that's harnessing those aspects.
Yeah, and there's a few more things I will add, but Kawan, you're next.
Yeah, I'd say the important thing about the newco structure, including the hub and spoke model you mentioned, Axel, which is definitely gaining traction, is the importance of the intercompany agreements between the Chinese company and the subsidiaries or newcos in the US. Sometimes that detail is kind of neglected a little bit, especially by Chinese pharma and biotech companies. They're not as sophisticated as US companies in making sure that the IP flow, whether it's through IP assignments and licenses, are done properly. And so when it comes to those newcos executing the deals, that can delay the deal where the investors and the licensees are doing the due diligence, and those intercompany agreements with services agreements, IP agreements, are not done properly. So it's just a good reminder to get those done and done properly at the outset.
Do them properly and do them early. Yes, that's right. All right, Aamir.
Yeah, well, the benefit of being last, I think everything's been said. The only thing I would add to this is something, a recent phenomenon I saw coming out of JPM just last week, is the increasing interest now of west to east. So what I mean by that is Western biotechs actually pursuing perhaps these newco, or actually these hub and spoke formations, where they can take some of their Western assets that are perhaps asset number 2 or number 3 that's getting no credit from the US investors, nor do they have the funding capabilities or the resources, see how they could out-license it to these hub and spoke, and then leverage the management capabilities and resources of Chinese companies to develop it and create value inflection points where they wouldn't ordinarily be able to do in the US. So that, I think, will be a trend that we'll see in 26 and beyond.
Yeah, very good point. So, I'm looking at the chat, and knowing we're out of time now, I'll just make a few concluding remarks on this. So just to summarize, from a newco perspective, the deal terms that a newco usually gets, there's a lot of overlap with pharma, but not fully. So there's an upfront payment, and the big distinction is there's usually an equity stake in the newco that the Chinese company obtains. And depending on how much downstream value is generated, that equity piece can be worth quite a lot for the Chinese company. So it could be certainly exceeding what a pharma might pay upfront for an asset. It depends on the asset, depends on the stage of development and so on. But it's quite possible that a pharma upfront payment is substantially lower than the equity value of a newco deal if the newco delivers the full value downstream. So that's to be considered. And, execution is a critical feature. We've learned that many Chinese companies are no longer just happy to do a deal. They want to do a good deal, and a deal where they can be sure that the downstream value, if it's a newco deal, will be delivered. So that means bringing a team to the transaction that actually can deliver, has a track record, has the ability to deliver the downstream value, becomes more and more of a critical feature. So going in with a checkbook and saying we're willing to pay for upfront payments and we're offering deal terms without knowing yet how you will get to downstream value, meaning execution, is getting increasingly more difficult, and for the right reasons. So it's interesting to see that dynamic. And we will see more high-quality newcos emerge as a consequence, where the team needs to be ready at the time when the discussions are taking place about a deal, instead of forming the team later and coming into the discussion only with cash. So with that said, I think we have an exciting landscape around us. You can't think about biotech anymore without China today. I would actually say the largest part of the ecosystem is now China compared to any other country. But we need to think about this as a global ecosystem and try to optimize how we work together, how we transfer assets, how we leverage the strengths of each geography and puzzle together the best possible global scenario. So at least that's how I see it. And I see an enormously exciting 2026 ahead with many more deals to be done. And I think that's also the consensus that came out of JP Morgan. We're expecting more in 2026 than we already saw in 2025. And given we're out of time, so I think we'll probably close it here. And Leon, do you have any other thoughts that you want to share before we do so?
Yeah, probably. Yeah. So there are so many questions. How about I pick one, you pick one. So each one of us are gonna share the blame, not picking the other. A lot of questions. I'll pick one first. Actually, this one a little bit kind of a provocative, but I actually have my thoughts. This from Judy Courier: Will the rise of assay being developed in China act as a drag on biotech investment in the US? Anyone want to take a first try? Please be quick and direct. Limiting like 20 seconds. Anyone?
Okay, I'll just give it a shot, and if anybody wants to add on. So in simple terms, we have just a more competitive ecosystem now, a larger, more competitive ecosystem. Initially, there is a bit of a drag in the sense that China has just come out, and there's a significant interest to see what's out there and how can that enable additional deals and asset transfer. Over time, I think it'll balance out. It will take a little while for that to happen, but I think it will balance out. And the US has always been very strong with innovation. There will be more innovation coming from the US, but right now it's a China catch-up period where we're all trying to level set the ecosystem, and then investors can be successful with their investments regardless of where the asset comes from. Once you form a newco, if the asset came from China or the asset came from Europe or the US, actually at some point no longer matters. Then the value creation is all about execution.
Yeah, I would add, I think totally agree. From my standpoint, I had like more than 60 back-to-back speed date meetings at JPM, and a third or even half of them are China biotech companies. The rest of them, US, European companies we talk to, I think the takeaway I have is timeline and execution. That's important. And I think one thing we didn't mention enough in this panel today yet is, if you look at the pace that China company can generate clinical data, and from a buyer standpoint, if you look at the POC of the data, I have all, China or US, European companies talking about, we're starting to dose patients right now. And then for China, the next follow-up for me will be AACR or ASCO, where they have, 40 patients, a couple of level of dosing, and I have good understanding of safety and some efficacy. But if you were to talk to US and Europe, if you don't have the China capability on clean dev, and then you'll be thinking about follow-up as more or end of the year. I think that is also an important element. To Axel's point, it doesn't matter for us to invest in a China biotech or European US. I don't think that's the difference, but the key difference part of this is how quickly you can generate that POC.
Sure. Okay, so thank you for that. One question that was in the chat was deal terms for newco. I think I've answered that already. When it comes to another, just pick another question. Are deals typically done only with big pharma, particularly in oncology? I don't think so. And the answer, we have actually covered that already. Pharma is doing a good number of deals. It certainly has stepped up, but the number of newco deals exceeds the number of pharma deals. And that will be probably the future that we will see as well, because it's just impossible for pharma to transact all the assets that are out there. And newco is a more flexible model. So over time, we'll probably see more newco deals. That would be my prediction. So now as we're closing, I will just make one last statement about Immuno-Oncology 360 or IO 360. As a co-host, we would like to just make everybody aware our 12th annual meeting of IO 360, which we think is the premier event for all stakeholders in immuno-oncology, come together, network, look at the latest data, the latest curated and hand-selected data that we think will actually move the field, and then have deal discussions, look at the markets, trends in the markets, and bring this thing all together in one conference, which is rarely done for any field. That next meeting will take place from the 10th to the 12th of February in Boston at the Sheraton Hotel. We look forward to have as many of you join as you can. And then we will talk about this topic again. Even in IO in particular, China plays a big role.
All right, I guess that's all we have for today. Thank you so much. I apologize for running over time, but a total worth day. So I will see many of you in Boston. Please fund me and Axel Hoos and everyone on the panel today. I'm pretty sure you all get invited. Go to Boston.
And thanks to all our panelists. This was a great discussion.
Thank you very much.
Thank you.
Thank you.
Thank you.
Take care.
Thank you all.
Bye.
Take care.
Bye,
Thank you
everyone.
all.